Jerome Clark, target date funds continue to rake in money. Why are investors so anxious to set it and forget it?
You're right. You're dead right. When you look at what's happening among target dates, within our 401k, almost 74% of participants are utilizing them. They're the most popular option. And it's because they resonate, because they take all the different things that have been challenging for investors to do, trying to figure out the asset allocation, trying to figure out, trying to be a market expert. All those different things are taken out of their hands and put into the hands of an investment professional, and they really like that, and so that's why they've been so popular.
And how does an investor make sure their target date fund fits in with the rest of their portfolio? Because a lot of people have other assets as well.
Well, the beauty about target dates is that they're an asset allocation product, so they are, by default, they're invested in a lot of different sectors, which is a good thing. So it's about really making sure that that foundation, we really recommend that target dates be a foundation, if not the only investment option, because they're so diversified, making sure that they're minimizing that overlap and they're not getting redundancy that they're not aware of through their multiple investments.
And how do Rowe Price's target date funds differ from the rest of the competition? Are they more aggressive, less aggressive? How do you measure up?
Well, I would say we're actually pretty unique in that we have two target dates. We have one that is considered to have a higher equity allocation. That's for those investors who their focus in retirement is about lifetime income. They're thinking 30, 35, 40 years that they need lifetime income. It has this higher equity to provide that capital appreciation that they're going to need. We've also introduced recently a more conservative glide path that has less equity in it, and that's for those large group of folks who are focused more on, I've saved throughout my career and now I'm going to retirement, I want to protect it, and so because of that, principal protection is more important. So it's really kind of figuring out does the objective of the target date meet the objective of you, the individual investor.
And then finally, how does an individual investor know that a target date fund is right for them? Is it because, well, they don't have so much time to plan for the future, or just because they're just kind of lazy, or because they say, look, this is a great way to invest, I want to go for it?
I would say it's really about what type of investor you are. The vast majority of us just tend to be hands-off investors. Whether it's because we don't have the interest, lots of us have different interests, and someone who is a doctor, I can't do what a doctor does. Also, there's a lack of time we find among many. And most participants most investors just tend to be more focused on other things. And so if you're a hands-off investor, target date products are a great product for you. What's surprising, what I found when I launched our products years ago, was that there is a significant number of hands-on investors who utilize a target date as a foundation for their portfolio, and then they utilize that hands-on approach to kind of invest around the edges for them.
All right, thanks for coming on, Jerome.
Thank you.
Thank you for watching The Street.